high. So I think the market is massively underpricing the long-term impact of what is going on right now. I think this is the biggest innovation and change in this space since stable coins, and then before that, Ethereum itself. So it's of an order of magnitude of that. So buy the rumor, sell the fact. The crypto's ETH's getting a little bit overbought. Probably corrects a little bit, goes again, probably goes into the ETH merge. And I think the narrative is buy the rumor, sell the fact. And what we'll get is like a cheeky 10% correction. And everyone's like, see, we're going to be able to buy it back at the lows. And it's going to rip everybody's heads off because the macro narrative is changing. If the macro narrative was still inflation going up, rates going up, then I would say, yeah, there's not much chance. Or M2 falling, the rate of change of M2. But that whole shift is starting to get priced by crypto. So I don't see how it goes down. I just don't see it. So I'm extremely bullish, as you can tell, and it's an uncomfortable place for me to be so bullish equities into a recession, but that's where I am. I'm very bullish bonds, and I'm extremely bullish crypto. I managed to catch the low pretty much to the day, and ETH's up over 100% in a month. It's crazy, but we've barely started. Everybody's underweight. We've got this massive supply shock, demand shock, and complete shift to the market. So there will be volatility. It will suddenly see these air pockets are down 10, 20%, really sharp. And everyone's like, see, it's all going to fall apart. And then I think it rockets higher.
One thing that I have also noted is the correlation between the consumer basket and the crypto space. So basically, if you look at the inflation prints that we've received over the past 24 months or so and calculate the correlation versus crypto, you get a correlation of minus 80% thereabout. So the interesting thing here is that if we've peaked, then you should buy crypto with an arm and a leg.
I think crypto forecast it because I've noticed the same.
Yeah.
And why is that? It's really simple. Is every day you bring home wages, go back to 2021. If you were young and you wanted to invest, you put it into crypto, this dollar cost averaging world. And then what happened was inflation came along and everyone was too busy paying the rent and paying for their vegetables in the supermarket, and they couldn't buy any crypto. So you saw the amount of new funds going into crypto falling with the same number of active wallets, but just falling. So if you take inflation away, incremental money flows into crypto market. So I think crypto saw it. It was something that helped me again get the low. Is I saw the turn. We knew it was coming, right? We probably got it. Both of us probably got it wrong last month, expecting the turn in CPI, but the crypto market said it's here, and I think that was dead right. And if inflation is going to go negative, well, where is Bitcoin or where is ETH? I mean, these things are huge.
They are. We've had a bunch of questions coming in here, Raoul. So let's try and answer a few of them before we conclude on today's show. Anthony is asking you about the potential for an earnings recession. We've been talking about this potential for an economic recession, but in terms of equities, earnings obviously matter. Do you fear the earnings recession in terms of your positive view on equities right now?
I mean, that's the flip side to my view. So my view is economy lower, but it's priced into equities. People like Yuri and Timmer, who we had on recently, is like, we could have another leg because earnings come down. And my argument with that is, I don't know real earnings versus nominal earnings. Not sure how that plays into it. And the last two times we had high inflation and growth went negative was 1990 and 1982, and the market didn't have the earnings leg lower. So some people say, yeah, but in 82, the PE was 7. Well, 1990 wasn't like that. So, the market had been ripping higher for a decade, with the pause in 87. So I don't think it's necessary. I think it's observable that it happens, but not always necessary. So I don't know, but I don't fear it is my point. Generally, it's not my base case. Even if we do re-rate earnings, I think the market just raises the PE.
I tend to think that earnings basically lack the equity market. to some extent. That's at least the conclusion you get if you look at it over a long time series. Final question for you, Raoul. You are wearing the T-shirt "Buy bonds, wear diamonds." We have a question from the audience. Which bonds? European or US bonds?
Well, I think European bonds are probably a good buy. It's just easier for most people who watch this to just buy US bonds, and because you can do the ETF of TLT. You know, those are around markets. You know, we all love the 10-year Treasury bond future. You can get leverage, and that's where most of us in the markets in macro land have made our careers, is trading euro dollars and 10-year bonds. Yeah, I used to trade a lot of bonds, but less so because European interest rates haven't moved a lot. But yeah, I mean, you can buy any of those. It doesn't really matter. You can even sell dollar yen, as Weston said, because basically yields back off, the selling of yen decreases, and so the yen rises. So there's a number of ways you can skin the cat, as it were.
Raoul, you know, I've made it my trademark to always conclude the daily briefing with a